Hey everybody, it's Ryan.Hoffman here at Summit Funding with a quick little update for you. I've been getting a lot of messages recently about Fed announcing they're going to lower interest rates, and what does that mean for mortgage rates? So just a quick little disconnect and give you guys an update here is that mortgage rates and the Fed interest rate are not the same thing. They are not connected directly. Now, lower Fed rate over time will result in a lower interest rate for mortgages, but they're not directly connected. It's more important what the bond rate. So the Fannie Mae bond, for example, is what directly connects to mortgage rates. Now, when the Fed announces they're going to lower interest rates, what happens sometimes is that will impact the inflation of the dollar. That will trigger people to either invest or not invest into the bond market, which will trigger mortgage rates to either go up or down. Now, what we see sometimes is that right after they announce that they're lowering the Fed rate, we'll actually see interest rates very slightly increase. So that being said, over the long term, it will be good for interest rates, but it does not mean that it will be a short-term pop and things will get better right away. Sometimes it takes a while. Sometimes it doesn't impact at all. Sometimes nobody has a crystal ball, but the main thing to think about here is that there is not a direct connection and we will not see an instant improvement either way. That being said, if you are either in process of thinking about refinancing, if you're thinking about buying a house, if you're thinking about investing and getting a second home or a vacation property, if you're thinking about refinancing to cash out and to pay off and consolidate debt to give you a much better financial situation, now is still a great time. And also remember, if you're talking to somebody, you need to be talking to a consultant who will give you advice based on your unique situation, not just tell you whatever is the headline of the day. So that being said, sometimes it makes sense to invest and put points to get the absolute lowest interest rate you can, and sometimes it makes sense to have a higher interest rate so you will actually get credit towards your closing costs, which means that for people who are buying their first house, for example, they're only going to live there from 2 to 5 years on average. And if you're only living there 2 to 5 years, it makes sense to go with the higher interest rate and pay all your closing costs because you will not live there long enough to see the benefit of paying all that cost up front. So that being said, if you want some advice, you want to look and see if a refinance or if you can purchase another property, give me a call. I'd love to help you. My direct cell phone number, 951-312-8650. If you are out shopping for houses right now, keep shopping. It's still great. You guys have a great day. I'll catch you later. Bye.